Hey, 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 what's up, everybody? Professor Keith. I've got Stephen, the calculator guy, on here. Glad to see everyone, and welcome to the first ever episode of Beards, Brains, and Blockchain. I'm glad to see everybody. Hopefully, everybody gets a kick out of what we do. Um, I like what he does. He does a lot of cool DeFi stuff. He kind of works his ass off to try to get the best things he can find and make it easy for everyone. And I try to do my thing as far as charts go, love it or hate it. And I like to think that we're two of the smarter people in the space, but hey, sometimes we're wrong about that too. Sometimes I'm an idiot. So we'll get right on into it here. I'll let Stephen have the floor first and talk a little bit about some DeFi stuff because I am not an immediate DeFi guy. I'm just not. I'll do it, absolutely. But of course, I'm charts first and I want to sell everything always. And there may be some things that I'm wrong about there. So for that matter, we'll hand it over to Stephen now and let him talk about it.
All right, well, thank you for the very warm introduction. So in terms of like basic DeFi things, I'm going to quickly go over some of the strategies that I think are probably the most beneficial for this time frame in sort of like the market cycle. So we'll look a little bit at Anchor and then maybe a couple options protocols, and I'll talk about what those are when we get there. Effectively, just ways to get a yield on your blue chips if you want to hold blue chips throughout different market conditions, which I know Keith will have his own opinions on, and I'm excited to hear those after this. So let's start with Anchor. I want to talk about what Anchor is, which some of you may already know, and then what the risks associated with Anchor might be, and potential ways to mitigate those risks. So let me go ahead and share my screen so we can sort of look right at Anchor. Uh, okay, here we go. All right, Keith, can you see Anchor?
I sure can.
Okay, awesome. So Anchor is a protocol where you can effectively get 20% more or less APY on stablecoins like USDT in this particular example. But a stablecoin is a token that is pegged to the US dollar, more or less. And UST is an incredibly stable stablecoin. It's also one of the most decentralized stablecoins, which means that there is no entity that can freeze UST or lock UST. And we have seen that happen with USDT and potentially even with USDC. So that's why a lot of people like USDT, but it isn't collateral backed. So it's an algo stable, and we don't really have to get into that. What you're interested in is how to make that 19.49%. So to do that, what you will need is a TerraStation wallet. You can go right onto Google and just type in TerraStation wallet, download the extension, and then just like any other decentralized wallet, you would click on it and set up your wallet. You'll get some sort of seed phrase or passphrase. Keep that. That's how you access your wallet. You can see this is my address here. It's okay for that to be doxed. Don't worry. Oh, I don't know if you can see my extension actually. You might not be
Mm-mm.
able to see it,
Can't
but
see it. All I can
once you
see is
get
where
your
it says
extension,
Connect Wallet. So you're good.
okay. So once you have your TerraStation wallet, you can load up on UST. The easiest way, or Luna, the easiest way to do that is through an exchange like KuCoin, where you can purchase Luna or purchase UST and then send it right over to your address. Now in Anchor, of course, you'll click deposit and you'll deposit UST, and that's it. At that moment, you'll receive AUST as your receipt token, and you'll start getting 19.49% yield. So what are the risks associated with Luna? Well, if you go over to the dashboard, you'll see some interesting information, right? You'll see that the total value lock in this protocol is $15.6 billion,
Real quick, the
which is
camera
pretty
kind of cuts
substantial.
off. The camera kind of cuts off the one of the 15, but that is 15,634,225.
Yes, it is 15, not 5 billion. It's
Yeah,
a whole
15
bunch
billion.
of
Yeah.
money. So the way that Anchor effectively works is it gets a yield on collateralized assets. So when you collateralize Luna or ETH, when you lend your Luna or ETH, uh, those two assets are getting a yield off of Lido, which is effectively another protocol that yields between 4 and 8% for either of these assets very, very, very consistently. So instead of allowing you to get those yields, it takes those yields and puts them back into the protocol so that you can get the yield on UST. Uh, Additionally, there is a borrowing mechanism where you can borrow against your collateral. And when you borrow, you are paying an APR, and that APR being paid goes to the sustainability of Anchor. Uh, however, the issue here is that it technically isn't enough. So what happens is big VCs and also sort of the creator of this blockchain, Do Kwon, will inject UST into the yield reserves every so often. For example, there's a recent injection of $500 million,
Whew.
which will keep it going for a while. Yeah. So that's the good thing, is that there's a ton of VC interest here, a ton of big money interest here, a ton of incredibly powerful crypto users interested in this. However, if Anchor does run out, then of course the yield is going to go away. And that does concern me for UST long term. And here's why. If UST gets a lot of sell pressure, then even though it's a stablecoin, it can depeg. It can go down to 98 cents per dollar, 95 cents per dollar. And in that event, because it's an algo stablecoin, Luna will be sold and burned to maintain the peg, which means the value of Luna will drop dramatically in order to attempt to maintain the USD peg. So that's sort of worst case scenario. You actually can buy insurance on your Anchor in the event of depegging. If you click protect your deposit over here, there are various different forms of insurance. I have, differing levels of faith in insurance protocols on DeFi. Other things you can do, if you watch my recent video on the safest yield, is you can collateralize USDC, which is Coinbase's stablecoin, and borrow UST against it on platforms like NX or on platforms like 100 Finance, and then take that UST and bring it over here. So if UST depegs and goes down, you've effectively shorted UST. So all you have to do is return that UST, and you still have your full value USDC amount on those platforms. Now, I know that sounds complicated, but if you do go to my video and watch that, it should make a little bit more sense. Okay, I know that was a lot. Any questions so far, Keith?
Yeah, I have a question. Sorry, my dog just randomly decided to bark. The mail lady came and she just thought it was important. So I have a good bit of money staked over there on UST. How fast do you get your yield? Do you get it daily, hourly, weekly, monthly? For everyone else who doesn't know.
Oh yeah, great question. It's at least daily. I believe it may even be more frequently than that.
Excellent.
So it's virtually real time.
Excellent. When you say when you say something like long-term worries, are you talking months, 6 months, year, 2 years? What? I know what I feel like is long-term in crypto.
Mm-hmm.
In crypto, a year is like 5 years, in my opinion. So for 6 months, if, for instance, we may very well be in a bear market here. If we're in a bear market and everybody wants to stake stables, at what point do you think there could be a run on stables based on a simple guesstimation timeline from your end?
Yeah, that's an excellent question. So two things are important to note here. One thing is that other stables, especially collateral-backed stables, are not going to be really affected by different market conditions, but algo stables like UST might be. So in terms of how long this might last, it's completely dependent upon effectively Do Kwon and the surrounding VCs re-injecting value into the yields.
Right.
So
Okay.
if you look at this chart right here, total deposit versus total borrow, you can see the total deposit is increasing rapidly, right? Effectively, where's November? Yeah, you have November hit where they're roughly the same. November, we sort of went bearish,
Mhm.
and then massive increase of UST into this protocol. But the borrows have, if anything, completely leveled off, which means it's bringing in less revenue, but paying out more.
Right.
So that's certainly a sustainability issue. Absolutely.
So essentially,
Right.
what they need is people to use their business and borrow.
Yes, that's right. But the borrow rates for Anchor are rather high. So what they've done is they usually pay borrowers to borrow assets, and they pay it out in their proprietary token ANC, ANC.
Right.
That's how they're able to do it, because they couldn't pay out in UST because that would deplete the reserves. So they have to pay out in their own, effectively, it could have been considered a farm token. It's now gaining more use cases and it's sort of transitioning, but that's what it was. So it does have long-term sustainability issues, in my opinion, and it's also in my opinion, the absolute backbone of the Luna ecosystem. But here's the other thing that you should really know is as UST increases in demand because people want to park their money in Anchor, Luna will go up in value because people are buying UST, which makes UST go up in value slightly over the dollar, which means a little bit of UST is being sold and burned into Luna, which just makes Luna's value increase.
Right.
Uh,
Bouncing off of that.
Yeah.
Bouncing off of that. We've talked about borrowing and shorting before. You can borrow on UST's platform and buy Luna, then sell that Luna, and then wait for Luna to fall, and then rebuy the Luna, pay back what you borrowed, and you keep the rest. We called that, we've talked about that being as a way to short. Would that be revenue positive or revenue neutral or negative for them?
Right. Well, I wouldn't short Luna right now. I don't know if we can pull up the
just
charts after this.
hypothetically speaking.
Right.
Hypothetically speaking.
Yeah. So, I don't think you can borrow Luna on this platform.
Okay, cool. Well, that answers that question.
So you
any asset. I don't know what the asset is. I'm just being general. I'm just speaking in general. So shorting something that the market's going down. You buy it on loan, you sell it, you wait for it to come down, you rebuy it, and whatever's left over, you get to keep. You can sell, you can hold, but you've earned that by borrowing and selling and rebuying.
Yes, exactly. So there are many borrowing and lending platforms where you can do that, where you can provide, some sort of stablecoin, borrow Ethereum against it, borrow Bitcoin against it, borrow whatever asset you want to short against it, immediately sell it, and then wait for the price to go down, and then repurchase the asset and keep the premium. Now, you have to remember that whatever your LTV is, whatever your loan percentage to the value of your collateral, so like if you have $1,000 collateralized, you borrow $500, that's 50%. That's your LTV. That's the absolute maximum profit you can make off these shorting strategies, because that's if Bitcoin goes to $0, effectively 0.1, then you can buy that Bitcoin for effectively nothing and return it, and you've made that $500 back as profit.
Makes total sense to me.
So so the maximum profit you can make is your LTV. That's absolute maximum if the asset goes to approaching zero.
Cool. Gotcha. All right, cool. Well, I know for me, I have a good bit staked over in UST because I was really attracted by the APY for doing nothing. Of course, I don't think anything's super long term. And because of that, because I saw a ton of charts going down, I diversified out and moved into multiple different staking platforms in an effort to try to get the maximum amount of APY that I could while the market was going down. Yes, there are a couple assets that are going up, but I wanted to make sure from someone like you who knows a little bit more than I do, what would be the better play there. And I absolutely love what you just said.
Which is shorting?
No, it's crucial. No, about the long-term sustainability of UST, about how it works, about because no one knows this stuff. Everyone just sees it and says, "Oh man, look at this percentage, ape," and that's not the way it works. It's just not.
It's great for Luna, but
right. Yeah, I get it. It's excellent. I love the whole Luna setup. They have their own cool wallet. They have their own website. They have their own bridge. It's excellent. It's very seamless. It's fairly cheap to use in comparison to Ethereum or Bitcoin. It's very simple and easy to use, and I like that.
And there are a few other protocols that really capitalize on what Anchor does. One of them is Aperture. Again, I've done 2 videos about this. You can go ahead and watch them. But it implements a pseudo delta neutral or relatively delta neutral or relatively market neutral strategies utilizing synthetic stocks and Anchor, which we just looked at, to open up like a short and long position and then farm the long position. All of this is done in 2 clicks. So it's automated for you through Aperture, which is neat. And you can get consistently between 25 and 40% APY. If you do that, I recommend doing it on a stock that over a 25-day period has less than a 40% volatility rate. So it doesn't go up or down more than 40%. That way, you're you're not at serious risk of getting liquidated.
You can probably find a lot of those,
and
by the
then
way.
right, because they're stocks. So
Yep.
Apple's what I'm going with, but like I wouldn't go with Coin, I wouldn't go with Arc necessarily. But then there's Mars Protocol, which allows you to do a 2x leverage on Luna, which gives you a really really big buffer on liquidation. But then you can get a yield on UST Luna if you want to bet on the ecosystem. But again, like making bets on ecosystems, making bets on particular tokens can be a large risk, and you are still susceptible to impermanent loss.
Absolutely. I love all that. So, with all that being said, I wrote down a lot of crap about what you just said. I'm going to try to go back and restudy this because that's the way my ape brain works. Do you have any questions about charts? Because, hey, that's what I do. I do the TA end and you do the fancy DeFi, let's make some free money end. All I do is read some data on a chart. So what you got?
Okay, so I do have a few questions. One of the questions that I get constantly is people will come to me and they'll sort of complain about you. They'll say, how come Keith says that news doesn't affect markets? And I try to explain that, because I've had a conversation with you about this before, that it's not that the news doesn't affect markets at all. It's, and correct me if I'm, or actually, why don't you clarify? Can you clarify that statement?
No, keep doing it. You're going great. Essentially what I'm trying to say is I don't spend time worrying about the news because the news is behind what I'm doing. All right. That's the easiest way to describe it. What I'm trying to say is that to say that no news matters is obtuse. It's completely obtuse. What I'm trying to say is that it doesn't matter in the sense that you're behind me. Don't be behind me. Be with me. Okay. I'm ahead of the news because we already see that the chart is a sale before any bad news comes out. And I have a chart of Facebook pulled up here to kind of explain that in a second, and so forth. Like if we're going to get good news, I'm ahead of you. The chart's already a buy. I've already found my price point. I've already got in and I've already made a move and prepared to take my profits somewhere because I know the chart's going up. Then you see good news. Then you see the chart go up.
That's right.
But I didn't miss already. I was already there. Plus, another thing we've noticed is just betting on the news doesn't always work. There's like a 30% hit rate. Okay. A lot of what I do is confluence based, meaning I want a consensus of many things before I go with anything. All right. I want a multiple consensus here. And when I don't get a multiple consensus, I just walk away. I'm not going to buy something that doesn't give me what I want. There's too many options to not take what you want. Okay. I got Facebook pulled up here as an excellent example. The earnings report for Facebook came out on February 2nd and said that for the first time ever in the history of Facebook, they lost users. Interestingly enough, if we go out on a higher time frame here and look at the weekly, Facebook was a sale all the way back in September. Facebook was telling you to sell stock back in September based on the chart, but you didn't get an earnings report until February saying that the bad news was coming out. That's 5 months that you could have had liquidity in your pocket ready to buy or short against this stock or anything in particular. It doesn't matter whether it's Facebook, Apple, Bitcoin, Ethereum, Taco Bell. I don't care. It's all the same. I'm going to be ahead of you and I'm going to have the liquidity to move around before someone who's just trying to play those news. And I've already lived that life. I've already lived the play the news life. You're so hit and miss that you can't make it consistently, and that frustrates people.
I think, right, exactly. Now, so the way that I've been describing what you told me is that the charts are the aggregate news, and they're also the sentiment of the market that has information prior to the news releases.
Correct.
So you're getting an aggregate of all of the news that would be impossible for you to read otherwise in the chart. The chart already holds all the news. So when you're looking at the charts, you're effectively looking at the news all aggregated for you, and potentially even the future news, because it may be priced in by shareholders, may be priced in by insiders.
Correct.
So the chart, like, it's not that news doesn't matter. It's that if you want accurate information about where the stock might go, the chart's going to have a better hit ratio than the news itself.
I would 100% agree. Imagine for a second a spray paint can. Inside of a spray paint can, there's a marble or a ball bearing inside of the can. One ball bearing. The can is the chart. You start adding in all the other little ball bearings, Hey, I got an earnings report. Hey, I got new buyers. Hey, I got shareholder meetings. Hey, I got profit to earning ratios. Hey, you're adding more and more and more and more marbles into the can. You're still putting it in the can. The can is the chart. All the other information just rattles around inside of it. Okay. And I'm able to see and use that chart, the spray paint can, to make my art and to get my profits out before another marble is added in or a marble is taken out of that. Doesn't necessarily matter. I'm worried about the can. All the other, as you said, aggregate things, little pieces that go in here and there, that all just adds to what I'm already looking at. It's like, it's hard to explain this, but I've lived that life before. I've been on a golf course with a guy who's doing deals on a Saturday. The market's supposed to be closed on a Saturday. How are you buying and selling shares? Well, a lot of people who are uneducated about it will simply say that's market manipulation, and it's not. That's the way business works. You just don't understand that because you've never been involved in it before. And until you've actually dealt with it and felt it before, you don't get that when that market opens, those guys have already sold their shares. They're at the front of the line ready to rock. Right. And you are going to be left behind because you're waiting on that news to drop. So, for that matter, I'm going to be ahead of that, and I'm going to plan ahead before that.
So let's pivot to a piece of news that is coming out, right? We have interest rates that may affect the equities, but we also have, and they may also be priced in, but we also have the news that Do Kwon, the founder of Luna, is going to purchase something like $2.2 billion of Bitcoin. And we also have the news that El Salvador is going to purchase billions over time, but I think $500 million of Bitcoin bonds next week. So the Do Kwon and El Salvador is happening over the next 2 weeks. So there are narratives that say something about Bitcoin, but what are the charts telling you about Bitcoin?
Right now, Bitcoin dominance is 43% of the market. Currently,
can you explain what Bitcoin dominance means?
Bitcoin dominance is the amount of money in Bitcoin versus the amount of money in everything else. It's 43% right now of everything. Once Bitcoin crosses about 50%, more of Bitcoin sentiment affects everything. Once it goes under 50%, less of Bitcoin sentiment affects everything. That's basic math, okay? Where over 50, Bitcoin has more pull. Less than 50, Bitcoin has less pull. It doesn't always mean everything goes up or down. Right now, Bitcoin dominance is down 0.5%. Ethereum dominance is up 0.75%. Stables are up almost 60%, up 0.6%. All right, so what you're seeing is stables are moving up. Money's coming a little bit out of Bitcoin at the moment, even though the chart might be up for the day or for the next 2 days. Money's going in and out of stables back and forth because people are unsure. Okay, so I'm reading the sentiment based on where the money's coming in and out of. So I can tell you right now, Bitcoin dominance weekly is a buy. Okay, we have an 821 upward cross, 821 EMA. We have a MACD pointing up, an RSI pointing up and over 50. We have everything we need except a higher high and a higher low. That's the only thing we don't have yet. I've got a red line drawn right here on the weekly chart.
What time frames are you looking at?
Weekly chart.
Okay.
Yep. On the weekly chart, I'm high time frame first, always, because I want to get the big picture first. Explained this before, but if I wanted to get to Steven, I know he's up north, I would type in his address. Google Maps would give me one blue line to get to him. Obviously, that's not the directions, but that's the general direction. And the high time frames give us the general direction. I then click go on Google Maps, and it pulls up my car, and I'm able to take every turn after that. But I need to see the general direction first. I know he's north. So if he's north, I know I don't need to be heading south, west, or east. I now have a general direction. That's what the high time frames give us. I want to know that direction first. I see everything except the higher high here. Now, when Bitcoin dominance forms a higher high, we're going to see it head up over 48% and potentially right around 50.5% as a barrier. Once 50.5% gets hit, you're liable to see more money come out of Bitcoin for a bit and go to something else. Does that mean Bitcoin's going to go up? Not necessarily. It may mean money comes out of alts and goes into Bitcoin. It may just mean Bitcoin removes money. Some money comes out of Bitcoin and goes back into alts or in the stables again. We recently saw stables take an amazing move up because the bear market started. And when the bear market started, everybody moved to stables because that's what you do when you take profits. You don't sit in something that goes down. You sit in something that's stable, a stable coin, or you pull your money out in cash. That being said, we can go over to the Bitcoin chart. I like to start with dominance first to see what kind of percentage we have. And it's clear that the high time frame may want to move up here, which is fine. So we'll go down to daily here. On the regular daily Bitcoin chart, this is the CME chart or Chicago Mercantile Exchange chart. This is the one that opens and closes on the weekends. And we've kind of found more accuracy with this chart than the others. And that's why I tend to use it. That being said, we're under the pivot, and the pivot gives you an ultimate bullish versus bearish sentiment. We're still under it right now. Close, but still under it. You don't have an 821 EMA cross, which is our first quickest buy sell indicator. That gives us our beginning of our confluence. Then we look at everything else. MACD is in the bearish zone. It's upside down. RSI is in between 40 and 50. That could just range sideways. So everything right now tells me that Bitcoin is not going to do anything amazing for a while. I need to see more happen here first. Looking at the Bollinger Bands real quick, or it's a simple gauge on price volatility. They're a bit wide, and they're probably going to narrow up here. And as they narrow up, that means sideways. Same thing for the weekly. As you see, Bollinger Bands are very wide, and they need to narrow up. Once they narrow up, we will see volatility increase, but not until then. You're going to get nominal sideways trading. Does that mean everything's bearish? No, not necessarily. Not necessarily. We take all this off, and we just look at the candles only. Second here. We see that we have absolutely nothing jump out at you bullish. You have a lower high. You have a downtrend that hasn't broken yet. You have indicators that are all pointing down. Nothing on the high time frame says go. Same thing for the monthly. However, you could say that this is a parabolic uptrend, which is fully possible. What is that? Essentially, we've got bars here that kind of show we're on a bit of an uptrend, and it's kind of trying to hold a little upward channel here. Excellent. That's not a perfect drawing, but it's close. You can see that if this continues, we very well could get a price action that goes a little something like this. All right. That could take a while to happen. That could happen in the next couple months. Q1 is historically bad for crypto. Q2, mixed. We're getting ready to start Q2 in a couple weeks. Q3, mixed. Some up, some down. And Q4, sometimes up more than down. So Q1 is always bad. I was kind of prepared for this. We had prepared everyone for this by looking at the charts and knowing that quarter one of every single crypto cycle is usually bad for about 85% of the time. That's good enough for me, and that's good enough to me to know to get out before this ever happened. That's how we were able to know, get ready on your stables. We pulled a ton of profits out, and a lot of people moved over to stables because of that. I was probably one of these people that you say are responsible for making the charts go down, even though I don't have that power. I'm not a billionaire. I can't do that. As far as the cash infusions go with the bonds and stuff, and that, I think that's excellent. That's great for the sentiment. That very well may help us get along on our parabolic uptrend here. We're still holding. It's in a bit of a holding pattern in general, in my opinion. I don't think anything's screaming bearish. However, this MACD is spooky. That looks like that wants to come down to me. So nothing jumps out and says go right there. El Salvador's looking at a 10-year projection, 20-year projection. Excellent. In crypto, that's literally 100 years. So
at least
if you're willing to wait 100 years, you know what I mean? Fine. I like to get in and get my money and get out because I can make exponentially more profits by doing so.
Right.
What else you got?
Well, thank you. Well, thank you for that analysis. I have meetings in 4 minutes, but
no.
Otherwise I would ask you questions forever. Yeah,
that's fine. That's exactly why I wanted to do this. I didn't want these videos to be long. I don't think you wanted them to be long either. So.
No, I mean, yeah, I got my take on the market via Bitcoin. Hopefully you got some DeFi information. I would have loved to have gone over some of the options protocols. So if you have the chance and you're already a DeFi user, do check out Friction and Katana on Solana. Check out DopeX on Arbitrum. It's a good place. These are good places or interesting places to park your blue chips, like Bitcoin, Ethereum, maybe Luna, maybe AVAX, maybe Solana. If you want to hold those for a long time. Of course, you may not want to. Maybe you may want to be a little bit more dynamic and do a little bit more trading. In that case, go check out Keith's stuff, apparently, or obviously. But I want you to have the options, right?
Same.
Get a yield on the tokens you want to hold, or be able to sell them and flip them based off of indicators. We're here to give you guys options.
Same.
And
Exactly.
hopefully informed options.
Yeah, I want everyone to be smarter here. I want a smarter space. That's all I want. I want a smarter space. You don't have to agree with me. You don't.
And I will say thank you. And one last thing is, if you are still bearish on the market, because of course, I mean, we've been bearish for what, since November. If you want to play bearish sentiment, you can do cash secured puts where you're actually getting a yield on stable coins up to something like 40%. I mean, up to, that's the maximum, but between 20 and 40% on some of these protocols where the strike is really low. So like, if you like these assets in the first place, this is a good way to get stablecoin yield and maybe inevitably, in the worst case scenario, pick up some asset that you wanted at a much lower price than it currently is.
Excellent. So with that, we'll talk about that next week. I want to know exactly about what you just said because that sounds hella interesting to me. I want to work on that in the background first. Till then, I'll see y'all next time. From me and Steven, thank you very much. After this, we'll have links to our Twitter on the outro here. If you would, check us out. Give us a follow. This will also go up on YouTube. So you'll already be watching it here, so you already know where the channel is. But while you're there, you might as well hit like and subscribe to both of us. Thank you very much. We'll see y'all next time. Y'all be good.
Always a pleasure.